Come on, you don't need that. Come on, down you go. Now, clearly this coronavirus is a serious matter. I probably, like yourself, have done a lot of reading on it, a lot of my own analysis. I've read a lot of argument from both sides of the story. There are, of course, the doubters that say we're all overreacting, it's overstated. They say that 600,000 odd people die every year of the common flu. The UN have studies that show 770,000 people died from HIV in 2018, which is only in fact marginally lower than where it was in 2010. Apparently, 2 million people die globally every year from eating too much salt with their evening meal. And get this, did you know 4 people die every year in the UK just by pulling up their trousers in the morning? That is still a risk trade that I am going to be willing to take, but there you go. But the coronavirus is real and it is affecting the majority of us in one way, shape or form. It really is tragic for those that have been directly affected, for the deceased of course, but also for their families. Let's have a quick look, in fact, exactly how it is affecting the globe. So here is the current state of play so far at the time of recording. We've had 82,000, pretty much 500 confirmed cases across the globe, 2,809 fatalities, most of which have been in China with 2,744 reported deaths. The other areas around the globe that are showing some fatalities, clearly in Iran, a bit of an issue going on there. There's been 27 reported deaths of 245 confirmed cases. Italy, we're seeing 453 confirmed cases, and so far, sadly, there's been 12 reported deaths. We're getting away with it in the UK for now. 15 cases, 0 deaths at the moment. Across the pond, similar picture. We're seeing quite a few confirmed cases, 60 confirmed cases now, but 0 reported deaths. These global crises have affected us and the financial markets for decades. Clearly you had the 2 world wars. Then you had the AIDS epidemic. That's almost 35 years ago. We had the SARS outbreak in 2003. And then, of course, the global financial crisis in 2008. They come and go, these events. But today, I want to talk to you specifically about how markets react to these global events. Specifically, the risk on, the risk off trade in the Forex market. Okay, so today we're going to talk about risk on, risk off. I'm sure you've heard that expression before when discussing financial markets. We're going to delve deeper into that in a few minutes. Before I do, let me remind you now to subscribe to the channel if you don't already do so. Got about 177,000 followers. Come and join the party. I'm sure you won't regret it. Don't forget to hit that little bell notification. That way, the moment I issue my next video, you'll be notified so you will never miss a trick. Don't forget to follow us on Instagram and of course on Twitter. Follow us on Facebook. If you do, you can tune in live every Monday afternoon, 2 p.m. London time, where I stream live discussing market opportunities for the week ahead. So what exactly do we mean when we talk about risk on and risk off? Let's assume you've got a pot of cash. You may be planning for your retirement or kid's wedding or something. There's 2 things you can do with that cash. You can either leave it under your pillow, bury it in the garden. Chances are it's still going to be there in 10 years' time. Although once inflation's had a go at it, it might be worth a lot less. Or of course, you can invest it. Now, all investments, as I'm sure you well know, carry a degree of risk. Now, usually speaking, the more risk that you take, the greater potential you have on your rewards. Now, there are 2 main risk asset classes that you can invest in. First of all, you've got the stock market. That's basically buying stocks, shares in companies. Or you've got the bond market, which are basically loans to governments and loans to corporations. Now, generally speaking, buying stocks, buying shares in companies is inherently more risky in terms of investment. We buy stocks and the stock markets go up, then we make money and we are happy with our risk. We buy stocks generally, we are risk on. We're taking on more risk. Now, if we lose faith in the stock market and we want to become more defensive with our money, with our capital, then we sell our stocks and we look for potentially safer investments, maybe the bond market or maybe burying it there in the bottom of the garden. That would be considered risk off. But this risk on, risk off has knock-on effects on other asset classes, specifically the Forex market. Now, just as you may be planning for your retirement or your child's wedding, the big players in the market, the fund managers, the investment houses, the investment banks, they are doing exactly the same, but on a lot larger scale. The markets believe now that the coronavirus is going to affect the world economy, pushing many countries into recession. Companies, after all, won't be making as much money, and global GDP is going to suffer, gross domestic product. So what's happening now is the stock markets are being sold across the globe. These big investment houses want to take on less risk and protect capital. At the time of recording this, I think the stock market is down, another down day today. Stock market has dropped almost 10% from its peak just about 2 weeks ago. And the other global stock markets around the world are following. So how does this affect our currencies? Well, basically, there are two types, I think, of classification when it comes to the currencies. You've got the risk-on trades, the risk-on currencies, and you've got the risk-off currencies. So let's assume now you are this big fund manager and you want to take on more risk for your clients, for your investors. You're feeling quite buoyant about the global economy. So you want to invest in the US stock market. Well, what better way to invest in the US stock market by funding it with a low interest rate currency? For example, the Japanese yen or the Swiss franc or even the euro these days. These currencies all have negative interest rates. It doesn't cost very much to borrow these currencies. So the fund manager will potentially borrow the Japanese yen, the Swiss franc and the euro, and they'll exchange that into dollars to buy the US stock market. So what will happen, of course, is that once he's borrowed the currency, he needs to sell it on the financial Forex market. And the Japanese yen, of course, Swiss franc, will have a tendency to go down because it's being sold. And the US dollar is going to increase in value. It's going to increase in value because the dollar is being bought in exchange for the Japanese yen. So in times of risk on, you're quite likely to see the US dollar perform well. The Japanese yen, the Swiss franc, the low yielding currencies, these are likely to underperform. Now, of course, if all this to reverse and the fund manager now becomes more defensive, he's more concerned now about the economy. He's looking at potentially the coronavirus maybe knocking GDP down to a certain degree in percentage terms. He's getting a little bit concerned. So now he starts selling the stock market, selling the US stock market, as you've seen, 10% drop in the US stocks at the moment. The fund managers, the big players, they're sitting on all these dollars. They need now to sell these dollars and basically repatriate this money back into the currency in which they borrowed from. So what's happening now is that you're seeing the Japanese yen, the Swiss franc, and indeed the euro. These are now being pushed up as money is going back into these currencies to repay those initial loans, and the US dollar is coming under pressure. So that's basically risk off. Now, another thing you need to consider when playing the risk on, risk off trade in the currency markets are the commodity currencies. What are the commodity currencies? Well, typically currencies such as the Australian dollar, Australia being a big miner of iron ore and copper, big exporter to China and the world. The New Zealand dollar, big in agriculture, machining and mining. That's another strong commodity currency. Canada, clear, big exporter of oil to the global economy. So in times of risk on, when the economy is booming, when GDP is growing, there's a big demand for these commodities. China basically being a big importer of iron and copper from Australia. So the Australian market is going to do well in times of risk on. Economies are expanding. Companies need to expand into more plant, machinery and so forth. They need iron and copper. So the Australian dollar will tend to do well in risk on. And New Zealand dollar, of course, with mining as well, machinery, big exporter of machinery, it does well in times of risk on. Clearly, when economies are expanding around the world, they need more energy in the form of oil. Economies are expanding, oil price has the tendency to go up. Canada is a big exporter of oil, so the Canadian dollar, the loonie, tends to perform well in risk on. And in terms of risk off that you're seeing at the moment, these commodities, currencies are being sold. China is slowing. China is contracting. We're concerned about China and the global growth now because of Corona. So the fear is now that the Australian dollar is coming under pressure as there will be less demand for its raw materials, iron, copper, and so forth. And of course, the loonie, the Canadian dollar, under big pressure at the moment as oil crashes through major support zones. The demand for oil is going to be less. The demand for the Canadian dollar is less. These are now in risk-off currencies. They get sold when markets are in this mode at the moment. With coronavirus concerns, these currencies are being sold down. So these are the risk-on and off currencies. One of the tools I use here at ForexSignals is this momentum meter. I took this screenshot just before I came on camera. It tells me exactly what is going on the different currencies. Each individual currency here is represented by a different coloured line. You've got the key here behind me, so you might not be able to see it too well, but you've got the Canadian dollar, the New Zealand dollar, the Japanese yen. This basically, these currencies are down here at the moment. Basically, the Canadian dollar is the purple line, the Australian dollar is the orange line, and the New Zealand dollar is the grey line. So basically, you can see here, these currencies are being sold at the moment. This is on a 4-hour chart. I rely on this on all my trading really to tell me the strength of one currency and the weakness of the other. Above the line now, this indicates strength. You've got the strength of the Japanese yen. You've got the strength of the Swiss franc. And these currencies are being bought at the moment in times of concern, in terms of risk off. So we're always looking at the bigger picture, and especially now with this dreadful circumstance that the world is undergoing with corona, forex markets are reacting massively to this risk off environment. So I hope you've learnt something there. Just a quick crash course in risk on, risk off, how this black swan event that's happening at the moment, the coronavirus, is affecting global stock markets and of course consequently the currency markets. We discuss this and more opportunities in our trading room, which we do each and every day. If you want to come and join us, please do so over at ForexSignals.com. As I say, if you liked the video, give me a thumbs up. If you didn't, give me a thumbs down. Don't forget to follow us on Instagram, Twitter, and indeed Facebook. If you want to join us on Facebook, you can join me Monday afternoon, 2 p.m. London time, where I'll stream live, giving my views for the trading opportunities for the week ahead. Till the next video, happy trading and good luck. Touch up. Come on, touch up. Can I have my seat back, please? Or do you want your mask back?